Hey, what's up, everybody? Welcome back to The Brief with your one and only Kenny Simpson with the Simpson team. And this week, I want to talk about rates. Oh boy, good old rates. They are rising. So I don't know what to tell you. I think a lot of us thought maybe rates would come down. We thought inflation would come down. We thought we've already might see a recession. So rates are continuing to rise. The more people I talk to and listen to in the short term, they're projected to keep going up. I can't tell you how much they've gone up, but I can tell you that 30-year fixed rates, conventional, are in the 6s now. Some lenders are probably approaching 7. FHA, VAs are in the 5s. So payments are going up, costs is going up, rates are going up. Also, I'd like to talk about the Federal Reserve, Mr. Jerome Powell. Jerome Powell is supposed to, I believe, speak this week. I can't remember which day. He is most likely going to raise 75 basis points again. Why is he doing this? Because inflation is not coming down. So he's going to raise things like energy costs, like your housing bill to run your AC, or if you're running a heater, if you live somewhere, whatever it is, it's costing more. Food's costing more. Everything's expensive right now. That needs to come down. So he's going to raise the prime rate. Remember, that is tied to HELOCs, credit cards, business lines of credit, things like that. That will affect you. Also, the money that he's lending to banks. So their cost of borrowing goes up. Your cost of borrowing goes up. Will this affect 30-year fixed, 15-year fixed rates, ARMs and stuff like that? We just don't know. Depends on how the market, the mortgage-backed security, the 10-year treasury, how all this looks at it. But it might already be baked in. Most people are basically pricing in from equities, stocks, and things like that, a 75 basis point hike. The problem is it's pretty split. A lot of people think he should stop hiking. We should let the hikes marinate, set an economy, because it is going to do its work. Many people are predicting a fall off of the consumer spending, the economy, recession looming in the next 3 to 6 months. We will see. So the Feds are going to hike again, probably again by the end of the year. Will that be it? We don't know. So nobody knows. If they tell you they knew, they're lying to you. Hate to say that, but so we don't know what rates are going to do. But I can tell you from what I'm hearing, everybody's predicting them to go higher. That's what we're seeing. We're not seeing any pullback. We're not seeing any correction. We've literally seen just an upward trend. Last, what I'd like to talk about is buyers. If you're a buyer and watching this, if you're a seller watching this, if you're a real estate agent, if you're anybody watching this and you want to know what's going on with buyers, well, I get to talk to them every day, and this is what they're thinking. A recession's coming. Am I going to have a job? Is my business going to work? Maybe I'm going to have a job. Maybe I'm getting a raise. Yes, some people are still getting a raise. There's a lot of things going on out there. But the buyer, what are they facing? They're facing a seller that, are they realistic, unrealistic? The most important thing for a seller right now, the most important, is how you price your house. If you price it too high, you're not going to get any offers, right? You're just saying, if you price it right, are you going to get the offers? Also, if you're a seller and you're selling a property that, let's be honest, it has a lot of deferred maintenance, you need a lot of work done, you're not going to get, this isn't like a year ago where people are going to come in and overpay you for that. People are going to come in. They're going to give you your offer. They're going to do an inspection. They're going to beat you up on things that you needed to repair. Yes, they will. Why? Because they're paying a lot for your house. They're paying more closing costs. They might have to be putting more money down. Their payment's higher. The buyer feels like they're getting hammered here. So for you, the seller, they're not going to pay for all that and go, oh, let me fix the roof and this and that. So what are buyers looking for? They're looking for a certain payment. That payment keeps going up. So they have to pay 1 point, 2 points. What are they looking for? Will the seller help cost? Will the seller help in that cost? So if I give you your price, will you give me $10,000, $15,000, $20,000 for closing costs? This is what's happening. Sellers are becoming more realistic. Sellers are also understanding that if you price your house right and it's a good property, you still could get 5 offers. You could sell it for over. Why? Because this is happening as I speak. Once again, this is just a connection of, where it is. Is there a disconnect or there's a connection? Either the seller's listing their price, right? And the buyer's accepting it, or the seller's off. So if you're a buyer and you're a seller, you might want to listen to this. If you're a seller and your house has been sitting for 60 days and you have a buyer looking at it, they're thinking only one thing. You haven't gotten an offer because you're not realistic and you're overpriced. Maybe if you're talking about a $10, $20 million house plus whatever, that could be different. But if we're talking about a $600,000, $1 million home here in San Diego, and it's sitting on the market and a buyer is coming to you, they're having conversations that, hey, what should we offer them? It's going to be under. Should they pay for closing costs? What do you think's wrong with the house? Why isn't it selling? Are they realistic? Do they really want to sell? So all these things are adding up. But what it comes down to is the buyer's costs have gone up. They're having to accept a higher payment. It's harder for them. You guys all have to understand and realize that. So the conversations I'm having with buyers is very educational. And the good news is, and hopefully the good news is, we don't have a prediction, we don't have a crystal ball. But to end this video is, if a buyer comes in and they get a good price today, they're paying a high payment, yes. Are they going to have an opportunity in the next 12 to 24 months to refinance into a lower rate, lower payment? I hope so. That's the consensus. That's what we have out there. But otherwise, thanks for watching. If we can help you out here, the Simpson team, please reach out. Until next week, have a great week. We'll see what the Feds do. See you then.